Michael Pellegrino, we've seen the VIX creep up recently, just like we saw at Pop 20 in January. How are you helping your clients with regard to the spike in volatility? How are you protecting them?
Well, I mean, one of the key things that we focus on is properly diversifying our clients. And one of the things at Goldstone is we've realized that every client is an individual or a couple that have different needs and wants. And by diversifying through different asset classes, obviously, when the markets do have a little bit of a gyration, that's normal. It's nothing to really be too concerned about. But one of the things that we're really focusing on is using a few different strategies that can actually do well during volatile periods of time. And we have a couple different option strategies that even with volatility in the marketplace, we're not going to have that much gyration going on. And actually, in some cases, we can actually generate a profit even as we're having markets fluctuating a little bit too as well.
It's true. When you get swings in the market, that's a good time to make money. Any good places to speculate right now, or how are you using some of these vehicles to help your clients speculate when you do get these big swings?
Well, obviously with a client, we want to identify what vehicles work for them, but at the same time, we want to identify the money that they're setting aside that's going to be utilized more for their retirement years. That stuff you really don't want to take risk with. After we identify that, what we want to do is then look at stuff that if they did have a loss on that money or significant fluctuation, that it's not going to affect their future. One of the vehicles that we use is actually an option strategy that can generate high returns, not only during good market periods, but can potentially also do that during even bad market periods too as well.
What about ETFs and inverse ETFs? More and more financial advisors are coming here and saying, we're really not going the individual stock route as much because we don't want to see our clients get blown up in a particular stock. We like ETFs, plus they're low cost.
Right. ETFs, have come on the market and, they're just surging, obviously. It gives people nice diversification, different asset classes or sectors. But the other thing is lower cost when you compare it to a mutual fund. And I'll agree with you there. You get a stock that blows up, you're kind of insulated inside those ETFs. A few things that we do at Goldstone Financial Group is we are looking at how to position those ETFs during good periods of time, but using inverse during bad period could actually help balance out a portfolio as well.
And then finally, where are you finding yield in this low yield environment? I know the 10-year Treasury, the yield's back over 2%. A lot of people say it's not going to get back down to 1.7% or wherever the low was this year. So tell me, how are you finding yield right now?
It's a couple different ways that we can find yield. One of the ways that we've been recently finding yield for clients is in the REIT market, or the real estate investment trust market. But we're a little bit more focused on what we want to put our clients into. We don't want a 2008 real estate debacle to come back and hurt clients. So we're focusing on ones that are more healthcare driven or ones that are investing in technology or what have you. And we're actually finding yields in the low 6s to the low 7s, which can produce a consistent dividend monthly or quarterly depending on what that client needs.
All right. Thanks a lot, Michael.
Thank you for having me.
Thank you for watching The Street.